This is the Financial Beat, helping you hit all the right notes in your financial plan. So sit back as we strike up the band. The Financial Beat with Logan Sadler starts now.
Ladies and gentlemen, welcome to another exciting edition of the Financial Beat. I'm Ron Stutz along with Logan Sadler. And Logan, of course, Vice President, Chief Investment Officer at Brigary Financial. Wherever you are in Southern California today, thank you so much for taking the time to listen to the show. And I think you're going to be very happy that you did, because Logan has some great things to say about getting to and through retirement, as he always does. Logan, how's it going?
It's going great, Ron. How are you doing today?
Not bad at all. It's been really busy, and I guess that's a lot better than the alternative. So, hey,
yeah, absolutely.
I'm all cranked up and energized and ready for another show. But first, let me put your phone number out there for everybody before we really get started. 888-823-PLAN, 888-823-PLAN. That is good for a discovery visit. You can get to know Logan. He can get to know you. Won't cost you anything and won't carry with it any kind of obligation. I'll pass along that number a little bit later on in today's show. First of all, let's start off with a fun fact here that has nothing to do with money, but I thought you would enjoy this. I read earlier this week that salt and vinegar Pringles are not vegan, but smoky bacon Pringles are. Does that make any sense to you?
No, it doesn't. It's funny because I feel like eating healthy sometimes just gets more and more confusing, right? Sometimes you think you're doing the right thing, and in this case, if you'd have asked me or quizzed me, I would have made the wrong choice there.
Exactly. I would have said just the opposite of what that fun fact tells us today. But let's get on to something that makes a little bit more sense. While certainly none of our radio listeners would be guilty of making any of these unreasonable requests, let's talk about some of the unreasonable requests that you sometimes hear. You tell us what makes them unreasonable and what might proper expectations be like instead. I'm sure you've had some people say to you, Logan, I really want to get some bigger returns with little or no risk. What's wrong with that statement? And what would you tell that person? Absolutely,
right? That would be, in nearly every situation, right, that would be a ideal fit, right? Having lower risk with bigger returns. I mean, that's the dream, right? I mean, I think we could all agree there. But I would say in nearly every situation, having the opportunity for bigger returns typically means taking more risk, right? I think the rule book has been written many different times on that same scenario there. And I think it's super important for the investor and the client in this case to understand what you're asking there, right? You're asking for a higher potential with a lower potential of risk. And a lot of the times that just doesn't exist, right? Now, is there different investments out there that might offer maybe a more competitive rate of return than like cash or CDs or things like that might have little or no risk? Sure, there's those out there, right? But when you look in general, Ron, in the spectrum of the universe of investments, the traditional saying, right, as you take more risk, the chance for reward just gets higher. And I think for a lot of people out there that are, getting closer, or maybe they're younger, right? The ones that are younger, it's okay to take more risk, right? Maybe more aggressive real estate deals or aggressive stocks or mutual funds or whatever you're investing in. Sometimes taking risk is definitely okay in that scenario because you have the time on your side to help recover, and you really shouldn't be a whole lot concerned about risk. Again, understanding what level of risk you're taking and all that's super important, but it wouldn't be your biggest factor. Now, as you get closer to retirement, I think it's definitely more important. And I see a lot of people, I always say around 50, 55, where they really start to kind of say, okay, I've been doing this market thing for a long time, right? In the 401k or the IRA. How am I going to now start significantly either reducing risk or diversifying into the other asset classes? But Ron, guess what? They don't want to sacrifice the return, right?
Yeah.
They say, well, I kind of like making 5, 6, 7, 8%, but can I do that in something that's safe? And the problem is that is where it gets very difficult to balance that out. And I think there's a lot of people out there that are maybe asking this question. And there is different investments out there. The lower risk investments most people think of, right, is CDs, treasuries, money markets, items like that, where they are traditionally lower risk, but the reward's not typically very high, right? That's where if you look into some things like fixed index annuities, which can provide you some really good market upside, maybe not all of the market, but they give you a lot of it, right? And the nice part is they offer you a floor of 0, where if the market goes up, you can get a percentage of the upside just depending on what insurance company. But on the downside, you have the protection of 0, meaning if the market loses money or that index lost money, you wouldn't risk any principal. So there is ways to mix things like that into your overall financial plan to see if those could help lower your risk and still give you some decent returns that might make it feel comfortable throughout your retirement.
We're talking about unreasonable requests on today's show. And Logan, I want to ask, have you ever had somebody come in and say, hey, Logan, I really like you a lot. You know, you and I could be buddies. Can you reduce your fees for me?
I was wondering where you were going there, right? You know what? I've had a few clients throughout the time here where they've said, maybe when they're interviewing us, they'll say, well, you say you charge X amount, and the advisor down the street or around the corner or across the country says he charges this amount, which is cheaper than your fee. Mm-hmm. Would you lower your fee? And 99% of the time, the answer is no, right? I typically don't lower my fee unless there's a very good reason why. Typically, what I always say is you don't want to typically haggle and spend too much money focusing on fees, right? Typically, how advisors work, and I'll give you some insight here. A lot of you guys probably already knew this, but some extra insight. Typically, the more assets you have and the more you invest with one particular firm, typically the lower the fee goes, right? Typically like when you buy in bulk at Costco, right? You're paying a little bit more, but you're also getting more, right, in return. Now, I think it's super important when you're looking at fees. You'll never really hear me knock on how bad fees are or this or that about fees. Where my real argument with fees comes in is, what are you getting in return? What is the value you're getting for what you're paying? Now, that comes with everything. Now, when you're paying an advisory fee, some people charge 0.5% and some people charge 2%, right? That's a big margin there. So you want to make sure you understand, what am I getting for paying more? Am I getting more comprehensive planning? Am I getting more tax planning, more investment planning? Are they giving me income and cash flow statements to look at, right? Are they giving me the full package I need to really have that ideal customized retirement plan? Or are they just saying, hey, here's a couple stocks and bonds we should buy, right? That's a big difference on what the cost of that advisor should be, but also what the cost and the value of that advisor is bringing to the table. And I think that's where a lot of really good advisors, and again, there's a lot of advisors out there that do a great job. And I think it's really important to find the right fit for you and your family and understand how you're paying them, but also know what you're getting in return for the fee. And again, once you show as an advisor, once I show the clients the impact that we can make in their retirement plan, and it's not always just investment returns, but also, hey, if we did X, Y, and Z, we could save this much money on taxes, right? If we did this a little bit differently, this could actually help your kids, inherit more money on a tax-free basis versus at ordinary income, right? There's a lot of those little things that we could do that would sometimes save, thousands and thousands of dollars on the overall retirement plan. And typically, I from my experience, is most people are okay with paying a little bit more or paying a fair price to know that they're getting the full comprehensive plan that they need, and they're getting all of those areas covered by that advisor.
You're listening to the Financial Beat, and we're talking about unreasonable requests here. And let me just say that it would be very reasonable for you to call this number right now, 888-823-PLAN. That's 888-823-7526. Leave a message with your name and phone number. You'll get a call back, and you can have a conversation with Logan Sadler yourself. That's not going to cost you anything, not going to have any strings attached at all. Here's another one that I'm sure you've heard from some folks. How can I get out of paying taxes on the money in my IRAs and 401ks?
Yeah.
What do you say to that?
That's the dream, right?
Yeah.
You really can't, right? There's no way to get out of taxes. And a lot of people advertise, get out of taxes by doing this. There's no way to get out of taxes. There's Roth conversions and things like that where you could do or different investment strategies, but you're not avoiding taxes, right? You're paying taxes, but you're hoping to pay them at a lower rate over the long term. The right question I think to ask there, Ron, is typically, how can I minimize my tax exposure throughout retirement, right, or throughout my plan? I think that's the right question to ask because there's a lot of answers there to unpack, right? There's no way to completely get out of taxes, but there's a big argument to be made where for some individuals out there where if we did Roth conversions and paid some taxes on some of that money now and let a huge chunk of that grow tax-free throughout your retirement years, if you were going to be in a higher tax bracket in retirement, And if we're doing conversions and it was able to knock you down into a different tax bracket, but also have now a chunk of money 100% tax-free, that probably could definitely increase your savings as far as taxes go in your retirement plan, right? So I think it's super important when you're looking at tax planning. So many people look at it through a lens. I always say, if you take a magnifying glass, right, on a sheet of paper and you get as close as you can to it, you really can't see the whole sheet of paper. You could just see what you're looking at right then and there. And that's what happens with a lot of tax planning. Clients and a lot of professionals out there, they only look at this year, right? What can we do for taxes this year? And how much taxes are we going to pay this year? But I think the real question is, most of our clients are okay with if they paid a little more taxes this year, maybe even next year. But if in 5 and 10 or 15 years of their retirement plan, if it was able to save them thousands of dollars in taxes long term, that would be the better move to make, right? So I think just educating clients and understanding that it's okay to pay some taxes and we're all going to have to pay our fair share, but how can we minimize taxes and increase our efficiency throughout our plan?
Okay, just one more here, and I know that you do a great job explaining all these things. I mean, heck, you explain things so that I can understand them and so that all of our listeners can understand them. And you have some folks who get kind of overwhelmed by what's happening in the financial world, and sometimes it can get a bit complicated. But do you ever have somebody just say, listen, Logan, I don't understand all this stuff. Can you just do it for me?
Yeah, I've had a few people we've met with in the past where they've said, hey, here's my stuff, heard you on the radio, we're good, right? Just do this. And the problem with that is that's as big of a compliment as that is for having the trust in us and things like that. It's also not a correct way for me to do my job, because how can I do a customized and individual retirement plan for somebody where I don't know anything about you, right? I think it's so important. That's why we have our clear and cut process where we have 3 meetings, Ron, before we ever bring on a client, right? We talk about that all the time, where we have our discovery meeting, our introductory to our strategy, and then we have the implementing strategy meeting. So we go through 3 different items there to make sure that we're educating clients and showing them the strategies and the benefit we could bring to the plan, but more importantly, getting to understand more and more about the client and what they want their plan to be like. So I think having that customized retirement plan, you typically have to participate, obviously, to make sure that you have the right, the right blueprint put together for you as far as travel, where you want to live, how much money you need, what's your income plan going to look like. Is legacy important to you, right? I think to have that truly customized plan, all of those things typically have to fall into place. And I think, one of the biggest things a lot of people ask, hey, why would I make that phone call? Or what's different with your firm versus, the person down the street? And I think that is definitely the difference, right? Our firm has specialized in planning for retirement for the last 25 years, right? Our firm has a long, long history of helping people build out that retirement roadmap. The roadmap that is typically tailored to address what is important to you in retirement, right? Whether it's tax efficiency, whether that's having an income that's going to last the rest of your life, lowering your risk in retirement, whatever those situations might be, making sure your plan is truly built and customized for you to help you get to and through retirement.
Logan, I know that there are folks out there right now who are ready to make that phone call. They've been listening to the show for a long time and just haven't gotten around to it or haven't been motivated enough to do it. But these days, it is an inflationary period of time that we're all living through, and a lot of challenges for a lot of folks. Isn't it time you got a handle on what your financial situation is when it comes to getting to and through retirement? 888-823-PLAN is your number to call. 888-823-PLAN, your number to call to have a conversation with Logan Sadler that is cost-free and obligation-free. Again, 888-823-PLAN. Reach out right now. Make that phone call to Regari Financial, and you'll be glad you did. You'll get a call back first part of the week, and then you can set a convenient time for talking with Logan Sadler. 2 convenient offices, Hemet and Redlands, and of course there is the option to do a Zoom call or maybe just get some answers to some questions you have on the phone. It's up to you. 888-823-PLAN is your number to call. This is the Financial Beat. I'm Ron Stutz. He's Logan Sadler. We'll be right back in just a moment.
Are you worried about whether you're ready for retirement? Logan Sadler and the team at Regari Financial can help. Just text the word advice to 21,000 to take Regari Financial's free retirement roadmap checkup. Text the word advice to 21,000 and we'll send you a link to all of our free resources. From there, you can click on the button for the Retirement Roadmap Checkup. You'll just have to answer a few questions and then you can see how prepared you are for retirement. This is a great starting point for people just starting to think about retirement. Text the word advice to 21,000 to get your free Retirement Roadmap Checkup today. That's the word advice to 21000.
Hi, I'm a cleverly devised personification of Wall Street. I'm one wild roller coaster ride away from wreaking havoc on your investments, and I love to mess with your emotions. If you're not properly diversified, you can bet I'll keep you up all night thinking about me. If you want to keep me off your mind, you really need a trusted advisor who'll look after your best interests. You also need a custom-designed financial plan that'll protect you from market volatility. Otherwise, when I take a plunge, I'll send you scrambling through your filing cabinet, hoping you were well prepared. Don't wait for turmoil to hit.
In Southern California, call Logan Sadler and the Regari Financial Team at 888-823-PLAN. That's 888-823-7526.
You're listening to The Financial Beat, striking the right chords in your financial plan.
Welcome back to more of the Financial Beat. Logan Sadler is here, and you better stick around because Logan's going to say some things that are going to turn on that light bulb above your head. That's what I always like to say. That's what happens with me. Sometimes even after this show, Logan, I'm sitting around and all of a sudden something comes on in my head and says, yeah, that's what Logan was talking about. So,
that little ding, or the light bulb coming up.
Yeah, and then I'm gonna follow up with him and talk to him more about that. But I'm sure that happens with other folks as well. And if you'd like to have a conversation with Logan, call 888-823-PLAN, 888-823-PLAN. You can sit down and talk with him one-on-one if you like, or both people in the relationship would be great to sit down and talk with Logan. You can have a conversation on the phone, just get a few answers to your questions, or maybe via Zoom, or maybe you might want to come into one of the convenient offices. Doesn't matter. It's free, and there is no obligation. 888-823-PLAN is your number to call to make that happen. Logan, not only do you have this radio show, but there are other ways that folks can glean all kinds of helpful information from you and the things that you say. Tell us about your, first of all, podcast for folks who missed some of our shows, and also your YouTube videos.
Yeah, for those of you out there that like this show and are listening out there on the radio platforms, if you miss a show or want to catch some other segments or some other shows we've done, you can head over to Podcast Land, which is either Apple Music, Spotify, Amazon, sometimes even on YouTube. There's uploads there for you to check out of the podcast. And again, there's well over 100 episodes for you to check out that I think a lot of you guys will find some value in. So head over there, click subscribe for the podcast, but you could also head over to YouTube. Now, the nice part about YouTube is for those of you out there that are more visual like myself, where you want to take a look and see some illustrations or at least just get some short educational content, you can head over to the Financial Beat on YouTube, and we have videos we do each week uploaded for you there they're only between 3 to 5 minutes long, but they'll give you a lot of quick and simple tips or tricks on some strategies or solutions that might pertain to you. So again, head over there to the Financial Beat and click subscribe, follow along, and hey, even leave us a comment of some other videos you might want us to do in the future.
Hey, let me just say that also, as you mentioned, those YouTube videos are relatively short. And so for those of you who have a short attention span like yours truly, they're really particularly helpful. So check them
Good,
out.
thank you.
Let's talk about risk aversion. What does it mean to you when someone tells you that they're risk averse? What does that mean?
Yeah, that's a great segue there. I think two things, right? I think there's one is they're not very informed or maybe not very educated on what risk is, right? I mean, I think risk is a very broad word, right? And I think that could be segment one, but I think part two to that could also be they've either had a bad experience themselves or they've heard of a bad experience of a friend or family member where they lost a bunch of money or it was just a bad deal or caused them lots of stress, right? I think those are the two contributing factors that I think of when I hear someone tells me that they're risk adverse and maybe what's caused that. But I think those are the two areas where that comes from to start that conversation.
Okay. Another question for you when it comes to risk aversion. Why do so many people claim to be risk averse but have so much of their retirement money in risky places? And maybe they don't realize it.
Very, very good point. Yeah, it is interesting because many people will say they're risk adverse or they don't like risk, and I'll look and they go, "Oh, you're all in bonds, right?" They go, "Yeah, I'm in bonds because those are safe," right? That's the first word that they think of is safe when they hear bonds or some other investments like that. And bonds are not typically safe, right? They're typically safer than stocks, right? Or equities. But bonds, a lot of bonds still have risk, right? So I think it's super important, number one, to understand where do you have your money and how does some of the risk factors play in each of those different segments? Because I think that's, Ron, where, like you said, a lot of people aren't necessarily aware of their overall risk because they really have never had a risk assessment done. It's funny, we do a risk assessment for all of our clients when they come on board and continuously throughout our annual meetings to understand what their risk level is, what is their potential of return, what's their potential of loss, and making sure we actually understand what's in our portfolio from a risk perspective.
You know, we have said so many hundreds of times on this show that a lot of people come to see you, and once you take a deep dive into their financial situation, you take a good look at their portfolio, you find out that they are, they have so much risk in their portfolio, and they are absolutely shocked. Describe a situation where you've seen someone carrying a lot more risk than they realized.
Yeah, there's been a few scenarios where clients came in, they say, "Hey, listen, Logan, I'm in the market or I'm in investments, and I just don't love risk right now, right? I'm very worried about risk." And it's funny where we'll go through their portfolio, and guess what? Like I said earlier, they've been moving investments from stocks or mutual funds or equity mutual funds or bonds, or equity mutual funds or equity ETFs. And guess what? They've been moving over to bonds, right? Our target date funds. And they go, "But Logan, in 2022, why did I continue to lose money, right? My stocks were down 20%. I went to bonds. Those went down 15% or 10%. Why did they go down? I'm not supposed to lose any money in bonds." And that's where a lot of the confusion is, where a lot of people are carrying more risk or not understanding the levels of risk of those investments. And they're making those decisions based off what they've heard, right? But based off what might not necessarily be true, depending on the market conditions, right? Or what the bonds they're going into. So I think there's been a few clients I can think of out there where they just haven't quite understood the full grasp of everything. And not because they're not smart or educated. It's just there's a lot going on, right? Market cycles change, investments change. And I think that's where having a good advisor to be there to help point you through these different directions to help you understand what levels of risk your investments have. I think that is what most people are okay with, right? Most people aren't opposed to risk, or they're not mad at the advisor or this or that. They just want to be educated on what do they have and what are some potential likelihoods if something were to happen. Would they be okay? And if so, what would that look like?
888-823-PLAN is your number to call if you want to have a conversation with Logan Sadler about your situation. Talk about risk and talk about taxes and everything else involved with your money. And you're going to need that for getting you to and through retirement. And you need a plan, of course. We're talking right now about risk aversion. Logan, what might a retirement plan look like that's been structured for somebody who does not like risk at all, but also they don't want to keep their money in cash where they're not going to get any growth at all? Describe a portfolio for someone, a plan for someone who fits into that category.
Yeah, absolutely. It's funny when you mentioned that. One person came to mind who came on board rather recently. And, it's funny, this client had said all the things you had just said. Hey, Logan, my biggest concerns are income and risk, right? I want to have a good income plan. I don't want to worry about what the market's doing, but I just don't want to go down a whole lot, and I don't want to go down much at all, right? If the markets were to be volatile. And in this particular case, the client had about $1 million. And again, we help people that have multi-millions of dollars, and we have people that have $200,000, right? So this is just an example of somebody that had about $1 million. And it was funny. So going through that strategy session, like we were talking about earlier throughout our process, where he mentioned all of the things that were most important to him. So building out a plan for you might look a lot different than this one specifically. But in this case, it was funny because he had mentioned income, right? And he had mentioned risk. So one of the things we were able to do with him was put about 40%, which would be about $400,000 in fixed index annuities that in his case were, very, very low to no risk, but also had lifetime income, right? So he had 40% of his money paying him and his wife a lifetime income that they can never outlive, right? So boom, okay, solve problem number one, right? Then the other thing was, again, still was risk. So with treasuries and things like that paying really good, we were able to structure a nice treasury ladder with about 20% of his money, right? So about 200,000 went into a nice treasury ladder with, a lot of you guys know right now, those are paying, 4 or 5% plus. So that's giving him some consistent yield and safe returns, right? Which again was one of the goals. Then one of the things we're very, very big fans of is looking at alternatives, right? Stocks, bonds, and things like that are great, but you want to look at some alternative investments. So we use a lot of different real estate investments that provide very good dividends, and they're typically different types of risk than what the markets are going to show you, as well as we look at structured notes, which are some investments where they have some protection layers built into it, but they could still provide income or growth based off market segments, right? So as you can see there, he didn't just have all of his money in cash, right, or all of his money in bonds. He has a very, very diversified mix. And then we were able to put about 20% or so of it in the market, right? That way it kept money liquid. It's a good spot to have longer term growth. But guess what, Ron? If that 200,000 was going up or down a little bit, he still had all of his goals and needs met by this other spots of income and diversification to where he wasn't as concerned anymore. He said, you know what, Logan? I like having money in the market. You're right. It's a good spot to have money, but I didn't want all my money there, right? So in this scenario, it was a good way to diversify things for him to where he was comfortable long-term to fit his goals. And I think each of you out there, your picture is going to look totally different than this one, or maybe similar if some of you have some of the same goals and concerns. But having that right level of protection built in for some of you is very crucial to help you have that peace of mind and that ideal retirement that you envision. Some people don't envision their retirement watching the stock market every day, and some do, and that's fine. And I think it's super important to understand what type of retirement do you want? How do you want to be invested? And also, what's your goals and dreams of that portfolio? And then working with a professional to help execute and put that plan together. And that's where our firm comes in.
888-823-PLAN is your number to call to get in touch if you want to find out more about Regary Financial and about Logan Sadler specifically. He's not going to pass you off on anybody else at all. When you have a conversation with Logan, it's going to be with Logan, and he has an outstanding team there as well, all of whom are ready, willing, and able to help you get to and through retirement. But you're going to sit down and have a conversation with Logan for free, and there is no obligation whatsoever. 888-823-PLAN, your number to call. If you want Logan to take a deep dive into your financial situation, find out what's going on in your portfolio, and find out how you can maybe make some tweaks to make it better if you do have a plan. And if you don't have a plan, that is all the more reason to get in touch. Everybody needs a plan for getting to and through retirement. 888-823-PLAN. We'll have more coming up in just a moment. Logan Sadler is on the radio, and we're going to answer some questions from some of our listeners coming up in just a moment. I'm Rod Stutz. Logan and I will be right back on the Financial Beat.
What is your name?
I'm Arthur, King of the Britons.
What is your quest?
To get retirement ready.
What is the PE ratio on your portfolio's top grossing products?
I don't know that.
Don't get blown to bits by complex jargon. Let Logan help you over the bridge to a meaningful retirement.
Welcome back to more of the Financial Beat. Logan Sadler, VP and Chief Investment Officer at Regary Financial, is here, and we're going to talk about getting you to and through retirement. It's important to remember that Logan works with 3 different generations of client families at Regary, and many of those clients have been with the firm for more than 25 years. So many people trust Logan Sadler, and so many people trust Regary Financial. Why not make a phone call and arrange to get acquainted yourself and see if you would fall into that category? 888-823-PLAN, 888-823-PLAN, your number to call, and you can get a discovery meeting, kind of a getting to know you session with Logan Sadler, same person you hear on this show. 888-823-PLAN. It's not going to cost you anything and not going to carry with it any kind of obligation. And, we try to keep our listeners out of the other side of the bars. We don't want, I don't mean the bars where you go drink. I mean bars in jail. Don't want our listeners to get in trouble. So we always talk about these crimes of the week, and there's some crazy ones on the books. But we're always looking out for you, so we try to make you aware of one federal crime every week to reduce the chances of you ending up in some kind of a sticky situation. Don't want to run afoul of the law. So here's a new one for you, Logan. I've never heard this before, but I read it this week. It's a federal crime to kill a grizzly bear in self-defense without reporting your self-defense killing within 5 days.
That's funny.
How in the world did that get on the books?
No idea, right? And when did my thing is always like we always talk about, number one, somebody had to do this to make it become a crime. But also, like, where do they come up with 5 days, right? Why not 1 day, 24 hours, 2 weeks? Where's the 5 come from?
I guess they're saying that, if you killed a grizzly bear in self-defense, you might have been lost somewhere out in the woods, and it took you a few days to get back to civilization. I don't know.
That makes sense. That makes sense. You're good at making sense of some of these things.
I don't know about that, but maybe they didn't have any Wi-Fi where they were. I don't know.
No kidding. There's no DocuSign or anything out there to submit a request, huh?
Yeah. Hey, we talked earlier on the show today about some folks wanting to get out of paying taxes and avoid paying whatever taxes they can. And the key, as you said, is to be tax efficient. And you can't get out of paying taxes, but you don't want to pay 1 penny more than you have to. Yep. So let's talk about tax planning. The subject of tax planning seems to get ignored by a lot of advisors out there who don't even take it into account. Tell us about the important conversations that you're having with your clients about these tax issues. And so many people are not having these conversations, and it's so darn important. First of all, the current tax brackets. Tell us about that and why that's so important to talk about it.
Yeah, absolutely. And to, talk on your intro there too for a sec, I'm with you on that, where it is amazing to me how many people come in and they go, they have a financial plan, and you look at it and you go, why aren't you doing Roth conversions? Or why haven't you looked at index universal life? Or why aren't you doing, tax loss harvesting? Or there's so many of these little areas where having some tax efficiency built into the plan can make a tremendous impact over the length of the retirement plan. And many advisors just don't want to touch it, right? They just want to manage stocks or bonds, which is, again, it can be important, but also looking at things more comprehensive. And tax planning is one of the crucial components, I feel, to having a successful retirement plan. Mm-hmm. And that kind of transitions right into your first question there, Ron, about tax brackets. It's amazing to me how many people don't really even know what tax bracket they're currently in, let alone what tax bracket they're probably going to fall into in retirement, right? Where I see some people where they come in and they go, I have a retirement plan. I'm just here to, do a check-in and a review and see how I'm doing. And I go, okay, you're retiring in a couple of years. Have you thought about what income you'll need, what tax bracket you're going to fall into? And a lot of times they have not even talked about that in their retirement plan, right? So I think it's super important because when you look at tax brackets, right now there's a few tax brackets that most people fall into, right? Which is 12%, 22%, 24%, and 32%. And it goes as high as 37% for those of you guys making lots of money per year, right? So where those fall at is based off your income bracket. Now, the one thing I always say is those tax brackets, do people think taxes right now are going to be lower now versus in the future? And the problem is most people believe tax rates are going to go up dramatically over the next maybe 5, 10, or 15 years. And the problem is most people really aren't doing anything about it, right? They're just kind of continuing to put tax-deferred money away and getting those tax breaks now, which again, for some of you might be good. But for a lot of you out there where you're going to fall into another higher tax bracket in retirement, maybe you're going to make $80,000, $100,000, $200,000 a year in retirement. You're going to be in a situation where your tax bracket might be very similar to where you're at now. And then again, if we think tax rates are going up, you might be paying a lot higher tax throughout your retirement. So understanding how those tax brackets fall into place now, but also throughout your retirement is crucial.
Okay, let's talk about Roth conversions. You mentioned that in our earlier segment of the show today. Yeah. And Roth conversions can really save you a lot of money on taxes in the future. Take a moment, if you would, and explain all that.
Yeah, so, I always say, let's say if you're driving, please don't do this, right? Because you're going to have to take your hands off the wheel. But maybe if you're listening in the car or your passenger seat or at your house or whatnot, you could do it. So, put up your two hands, right? You got one on the left, one on the right. One is taxable and one is tax-free. So there's two buckets, right? Two hands. Now, the money to go from taxable over to tax-free, there's somebody in the middle, right? And that other hand is Uncle Sam, right? So what that means is as you're going to transition and convert, which means take money from taxable accounts and move it over to Roth, you'd have to pay taxes now based off your ordinary income rates, which again would depend on your tax rates we just went over. Now, in that case, why would you pay taxes now versus later? Well, the whole point of some of these is to convert money now, maybe at a decent tax rate or a lower tax rate, to convert over to where the money now grows 100% tax-free for the rest of your retirement or the rest of your life, right? So it's one of those scenarios where a lot of you, the guys that are, or girls that are 50, 60 years old, or maybe 70 years old even in some cases, there might be some significant room to move money over in your current tax bracket. Like I'm looking just for an example right now, a couple making $100,000 a year filing jointly, they fall in the 22% tax bracket, right? $100,000 a year. That bracket goes all the way up to $190,000, meaning there's a $90,000 hole there that you could fill up in your bucket and still only pay 22% tax approximately on those conversion amounts, right? So that's a quick example there about how we could look at filling up your buckets depending on your situation and pay some taxes now to convert money over to where we're shielding ourselves from taxes if we think they're going to go up over the next few years, or if we're going to fall into a decently high tax bracket in retirement and have some of that money moved over to tax-free. Now, there's some scenarios out there, Ron, you asked a great question there in your intro as far as does it really save money or do they really work? Now, there is obviously, you know me, I can get into some good spreadsheets and fun stuff like that. But I have multiple clients that we're doing Roth conversions for right now. And again, they're not for everybody. You're really going to understand and make sure what your situation looks like now and kind of get a clear picture of what it could look like throughout retirement to see if these are a good fit. But I've had clients where we're doing them where it's going to project to save them, even if tax rates stayed the same, it could save them tens of thousands of dollars in taxes throughout their retirement just by simply moving money around through conversion strategies, not hoping the market does well or trying to find that lucky stock, right? But by simply looking at tax planning and understanding where you could exploit yourself to really benefit yourself long term.
And of course, the bottom line in all of this, as you mentioned, taxes are certain to be higher in the future. There's no question.
It's almost a guarantee, right?
Yeah. I mean, you know, the way the government has been spending money, taxes are going to have to go up no matter who's in charge, no matter what administration. You know, it's best to pay taxes on that money now and then be tax-free later on.
Yep.
Another situation here that a lot of people don't really talk about with their financial advisor, if they have one, Social Security taxation. That can be kind of a complicated thing to explain and certainly to understand. Tell us about taxation of your Social Security money.
Yeah, so most people say, well, right at 62, I'm going to turn on Social Security, right? That's the best time to do it. I heard it from my neighbor, a friend, a brother-in-law, whoever, right? Well, the problem with that is most of us tend to keep working past age 62. And the problem with that is if you start drawing income on your Social Security and you're still making good money, you then would now fall into a position where you're going to be taxed pretty heftily on that Social Security. 50 to up to 85% of your Social Security could become taxable in that event. And the amount you're asking, I'm sure, is, well, how much can I make, right? So for 2023, the amount is, if you're under full retirement age, is $21,240. So it's not a very big amount, where if you have over that, your Social Security, as far as earned income and things like that, can get taxed very, very heavily. So I think it's super important to understand, based off your plan, when is the right time for you to take your Social Security? Because I get the whole point, right? I'll take it now because I'll be younger and I'll get more out. Well, you'd get more out theoretically, but you wouldn't net more probably, right? So it's important to really take a deep look at your financial plan and understand what assets you have, what investments you have, and also what is the impact of this going to look like throughout your retirement on your tax situation as well.
All right. We're talking about tax planning, which is so important. And Logan Sadler, always glad to sit down and talk to you about that particular subject. But what about RMDs? A lot of people don't really understand how those required minimum distributions work. So tell us, would you?
Yeah. For example, there's a couple different rules that have just been passed about how they're working, but let's use the most simplified one for now. Those of you that are approaching, let's say you're over 65 or 67 years old or so, when you turn 73, and for some of you it might be 75 if you're younger than that, where basically at age 73, you're going to have to then begin withdrawing an RMD. What that means is any money that you have in a 401k, IRA, any type of retirement account where you're no longer working and things like that, they require you to take a distribution. So a lot of you might be retired or envisioning yourself, being retired down the road. And you're saying, well, you know what, Logan, I have Social Security, I got a pension, I got a little bit of retirement savings. I don't really think I'm going to need to touch that 401k much, right? Well, the problem with that is that when you begin to turn 73 or required minimum distribution age, they require you to start taking out a percentage, right? Every year after that, it goes up. So it starts out, in the mid threes, right around 3.5% is what you have to start taking out of your 401k or IRA. So if you had $1 million and it's closer to 4%, right? That would be about $40,000 you'd have to take out that year and pay taxes on, right? So that's one of those things where it gets harder and harder to leave money behind in 401ks and IRAs because the distribution amount goes up each year. So it goes up, right around 1/4 to 0.5%, give or take, per year. So by the time you're in your mid 80s, you're taking out, 6, 7, 8, 9% sometimes, depending on how long you live. And it gets to a spot where it's very, very difficult to make any money in there, but also your tax implications are going up each year. That's why looking at the strategies we had mentioned, like understanding your tax brackets, looking at Roth conversions, a lot of those tax plans can be very, very important to help mitigate through that RMD age, because the problem is most people don't do anything about their 401ks and IRAs. They just let that money sit and grow, and if they don't need it, that's great. But the problem is that RMD amount is just growing and growing as well. So making sure you understand how the impact of that is going to come into play throughout your retirement is absolutely crucial. And, one thing I always like to say here to end the segment is I think a lot of you out there that have a retirement plan, maybe you have an advisor that manages your stocks, your bonds, or maybe you got an annuity or something like that. I think it's super important if you're not understanding how your taxes are going to play into your retirement, if you're not understanding, is there anything more tax efficient you could be doing now or throughout your retirement? I think it's super important you give us a call. Come in for that discovery meeting. It doesn't cost anything. We're not going to pressure you into anything. Let us just get to understand a little bit about your situation, understand what your goals, your dreams are, what assets you have, and really what you're looking at over the next few years, and see if we can't make an impact and show you some tax strategies and some investment strategies that might actually be a lot more efficient, not only now, but throughout your retirement.
You want to have a conversation with Logan Sadler and get all that information? 888-823-PLAN, 888-823-PLAN. That is your number to call to get in touch with Gary Financial. If you're calling today during the show, all you need to do is leave a message with your name and your phone number. You'll get a call back, and the outstanding folks at Gary will set up a time for you to have your conversation with Logan. It's just that simple. It's free. There is no obligation involved. Why would you not take advantage of the opportunity? 888-823-PLAN. That is your number to call for Gary. Remember that Gary Financial has 2 convenient locations, one in Redlands, one in Hemet, and they have terrific partnerships with local CPAs, attorneys, real estate agents, mortgage lenders, Medicare specialists to help offer well-rounded guidance in all things financial for their clients. It's kind of a one-stop shop. You get everything connected to your money and your lifestyle in retirement right there in one place at Gary Financial. Again, your number to call to set up a time to have a conversation with Logan for free, 888-823-PLAN. This is the Financial Beat. I'm Ron Stutz along with Logan Sadler. We'll be right back.
Financial stability, relaxing retirement, tax reductions. Do those things sound like music to your ears? Then you've tuned to the right show, because here on the Financial Beat, we want to give you the tools to build your financial plan. So don't change that dial, because Logan Sadler has some information that will leave you singing the tune of a better retirement.
This is the Financial Beat with Logan Sadler. And Logan, I know you played sports a lot growing up, and I certainly played baseball when I was a kid. Mm-hmm. And Satchel Paige, one of those fellows always looked up to, and sadly enough, he did not get as much publicity as he should have, and didn't get the opportunities he should, because he was playing in the old Negro leagues. Yep. And Satchel Paige was amazing, but he had some really interesting quotes. I think one of them was like, "Don't look back, somebody might be gaining on you." But,
that's a good one.
But another one, he said, "How old would you be if you didn't know how old you was?" Well, that's a good question for all of us. How old would you be if you didn't know how old you were?
Well, what's funny, I'd say high school was some good days there for a lot of us, right? Or maybe college.
Yeah.
But I would probably say I'd say probably 15, 16. There's a lot of exciting things going on there. Or I'd probably fast forward to like 22 or 23. Just because you're an adult then at that age, you could do a lot of things, and you're typically still in good shape and all that stuff. So I would say either high school or 22 or so, somewhere in that age, right, where you got your youth on your side, but also we would all probably do a couple things a little different, right?
Yeah, and you don't have all these responsibilities and taking care of kids and having bills and everything else. So.
Even though it's all fun, right? But it's a lot of work.
Exactly. In some ways, you wouldn't trade what's going on right now for anything in the world.
Great way to put it.
Yeah. You're listening to The Financial Beat with Logan Sadler. There's more coming up in just a moment.
It's getting to know you time.
You're listening to The Financial Beat with Logan Sadler. Ron Stutz here with an off-the-wall question here for you. Logan, I consider you an expert in financial planning. And just from having talked to you all this time, we've been doing this show. But if you can instantly become an expert in something else, what would it be?
That is a very good question. I'll probably throw you way off track here because I was going to say something, like taxes or whatever, but I already kind of do that, so that's kind of cheating, right? It's not the same, but similar realm. And then obviously a lot of you listening knowing like sports, that'd be kind of an easy out. But I'll say marine biologist, right? If I could be into I love the ocean, and it's one of those things where I feel like it's just crazy how mysterious it could be, and it's right here, right? A lot of us think about space, but the ocean's right here, and we know so little about it. So I would probably say that would be up there on one of the random things I would throw out there.
Wow, that is cool. Yeah, great. Marine biologist, Logan Sadler. Maybe in another life. I don't know.
That'll be our next radio show.
Yeah, exactly. Hey, we'll be right back with more in just a moment. You're listening to The Financial Beat.
Logan Sadler is the Vice President and Chief Investment Officer at Regary Financial, and he has his own YouTube channel. Search for The Financial Beat on YouTube, and you can find over 100 videos from Logan about different retirement planning topics. For example, Logan has a video called 3 Key Ages for Social Security. It's a 5-minute video where Logan will break down the key ages that impact your Social Security benefits. Check out that video and over 100 more on the Financial Beat YouTube channel. Just go to YouTube and search for The Financial Beat.
Does it feel like you and your financial advisor aren't on the same page?
Not quite my tempo. Were you rushing or were you dragging?
Logan and the team at Regary Financial can stay in tune and on rhythm with you. Keep listening to The Financial Beat.
Welcome back to more of The Financial Beat, and the beat goes on, as they say. Logan Sadler is here. Logan works with 3 different generations of client families at Regary Financial. A lot of folks been counting on Logan and Regary for helping them get to and through retirement. And we'd love for you to have a conversation with Logan, get to know him a little bit. It's not going to cost you anything at all to do that, and not going to obligate you to do anything beyond that conversation. So come on, call this number, 888-823-PLAN, 888-823-7526. But the easy way to remember it is by using the word plan. We all need one, 888-823-PLAN. And Logan, we haven't talked about this too much today, but I wanted to say that it is necessary for everybody to have his or her own plan, because this is all based on individuals. Your situation is different from mine, and mine is different from the next listener who calls in. It's all individual. There's no one size fits all when it comes to retirement planning.
Yeah, totally agree. There's a lot of different components and variables that are going to go into creating and crafting a good retirement plan. And everybody's a little bit different with how they envision their picture and their puzzle being put together. And make sure you have the right team to help be there to put those pieces together is crucial.
That is why it's so important to not get caught up in what your coworker is saying to you, or your brother-in-law giving you advice. You ought to do this because this is what I did and it worked out. Well, your situation may be completely different from your brother-in-law. So,
Agreed.
It's so important to get your own specific plan put together. I got a question for you about television. You watch a lot of television at your house, or I know you have 2 young kids, so maybe you don't watch as much as you used to.
I don't watch as much as I used to, and it's funny where I'm stuck on the oldies. I don't watch a lot of new television, and not that I don't think it's good. It's just I haven't had much time to invest into some of the recent shows and TV that's out there, but I've heard good things.
Yeah, well, is there any particular show that you can think of that you have really enjoyed watching over the years?
Yeah, you know what I would say. Well, I loved Sons of Anarchy. I thought that was a great show. A little crazy in some areas, obviously, but it kind of kept you glued to the TV.
Yeah.
But that was older, right? Queen of the South, I thought, was a good one. And then Ozarks, I would say, probably is the most recent one that wrapped up here a couple years ago or last year. And I thought that was a great show overall. I did not love the ending. I won't spoil it for anybody out there who hasn't watched it yet. But those are probably the three shows I've seen the most of and really enjoy watching over and over again.
I certainly agree with you about Ozark. I mean, my goodness, that was awfully good. It was kind of riveting, I would say.
Oh, yeah, it was great. Bone-chilling.
I agree with you. I was not crazy about the way it ended, but don't want to give anything away. So, let's go to the mailbag here. Got some great questions that have come in from our listeners, and the first one is from Melody in Orange County. Melody says, I'm a teacher and planning to retire in the next 5 years, but my current schedule has allowed me to start a side business, and it's actually going really well. I'm able to live off my teacher's salary just fine, so how should I invest this extra money that I'm making?
Yeah, great. That's awesome. That's good to hear where you got your teacher salary coming in and also have a little side gig going on, which sounds like it's going well. And then the teacher salary is just awesome. So I think that is a good spot to be in where you have consistent income coming in. One thing I would look at is if you're a teacher, you probably have access to a 403B. So making sure you're putting as much as you can and maxing out a 403B is probably one of the first starts. Also looking at maybe like some non-qualified brokerage accounts or something in there where we can create some liquidity and some tax efficiency throughout the time frame in there would be another good start. But it really depends on what your overall goal is for the money, whether it's liquidity or growth or safety, and kind of executing where those lines might cross and making sure you get a good investment plan put together. But I think any of those three areas I mentioned would be a great place to start.
Yeah. Okay, one more question here. Today it's from Lorena in Yucaipa. And Lorena says, I've lost a lot of money in my 401k in the last several months. Mm-hmm. Should I stop putting money in until the market is doing better? Well, we've heard that a lot, haven't we?
Absolutely, right? It sounds, when you say it, it sounds good, right? Okay, I'll just wait when there's stormy seas, right? I'll wait till the seas calm down and then put money back in, right? I get the concept, but believe it or not, depending on your age and your situation, if you're younger, it might actually be better to keep putting money in there. There's a thing called dollar cost averaging, where basically if you draw a line up and down multiple times, like a little squiggly stock market line, typically if you're putting money in on a monthly basis or an annual basis or however you're doing it, it's one of those things where sometimes you're buying high, sometimes you're buying low, right? And believe it or not, the statistics show if you're buying consistently during a down market, long term, if that goes up, which typically they do, you then bought money at a discount, right? You paid less for that stock or that mutual fund or whatever it was. So over the long term, your reward might have been greater. So believe it or not, you really want to understand your overall situation and your goals, and again, understand what you're invested in would be one of the most important things for me to look at. But definitely understand the concept of what dollar cost averaging it is and making sure that, again, it's working beneficial for you. And understanding your plan, I think, will give you a little bit more comfortability during these volatile markets because, it's happening. They happen now, they happen later, and they're going to continue to happen. So making sure you have a solid plan and you're aware of what these volatile markets will look like is super, super important to your situation.
Good questions today from Melody and Lorena. I hope you both will follow up with a phone call, and I'll give you that number again coming up in just a few minutes here. But Logan, there are some people out there listening to the show today. I'm sure, questions have popped up in their minds, and maybe, you've had some kind of concern for a long time, and you need a quick answer to that. Are they just welcome to call your office at any time and get these questions to you, or how do they go about doing that?
Yeah, they could do a couple things, right? They can call the voicemail, the number there that you give them, the plan number. They could also go to our YouTube channel, type in there on one of the comments there what questions you have. You could also go to financialbeatradio.com and leave some stuff there as well, too. So there's definitely a lot of ways to get a hold of us to get your questions answered. And if you're out there, and again, if you're approaching retirement, or maybe you're in retirement and you're wondering what it would be like to work with a firm like ours to help get you to and through retirement, to have somebody there to help guide you through these tricky situations and put those puzzles and those pieces of the puzzle together, definitely give us a call and book that discovery meeting. Doesn't cost anything, and I definitely think you'll get a lot of value away from it.
888-823-PLAN is your phone number to call. If you'd like to get in touch with Logan at Regary Financial, just leave a message with your name and phone number. You will get a call back first part of the week, and then you can arrange a time to have a conversation with Logan. It's not going to cost you anything and not going to carry with it any kind of obligation at all. 888-823-PLAN is simply a service that Logan Sadler offers to all the folks who listen to this show. Don't forget also the YouTube videos that are out there that are extremely helpful. And if you miss a show or part of a show, for example, if you tuned in late for today's show, pretty soon you'll be able to listen to the podcast because there are so many of them available, and that way you don't miss anything. 888-823-PLAN. That is your number for Logan Sadler, Vice President, Chief Investment Officer at Regary Financial. Hey, Logan, it's been my pleasure to hang out with you for a while today, and I know you're going to get a lot of phone calls from our listeners out there.
Yeah, I appreciate that, and I definitely always enjoy talking to some of the listeners out there, and always great experiences, and enjoy doing the show. And we're going to be back here again next week with another one full of some impact and some education.
Remember, a discovery meeting, no cost, no obligation, 888-823-PLAN. Logan Sadler and I will be right back here next week with another show, The Financial Beat.
Regary Financial and Insurance Services, Inc. and BD Financial Group, Inc. are separate and independent entities. The information provided in this presentation is presented for educational and informational purposes only and does not constitute financial, investment, tax, or legal advice, nor does it constitute an offer or solicitation to buy or sell any securities.